Ford Motor Company Q3 2025 Earnings Call Summary. Good day. This is a summary of Ford Motor Company's third quarter 2025 earnings call. Overall financial performance. Ford reported a strong quarter, with revenue reaching a record $50.5 billion and adjusted EBIT at $2.6 billion. While EBIT was flat year-over-year, this was achieved despite a significant $700 million net tariff headwind. The company is on track to raise its full-year 2025 EBIT guidance, but for the impact of the Novelis fire. Adjusted free cash flow was a robust $4.3 billion for the quarter and $5.7 billion year-to-date. Ford ended the quarter with substantial liquidity, holding nearly $33 billion in cash and $54 billion in overall liquidity. Key financial metrics and segments. Ford Pro. This segment continues to be a powerhouse, delivering $17.4 billion in revenue and $2 billion in EBIT, with a strong double-digit margin. Revenue and volume grew by 11% and 9% respectively. Growth was driven by strong service parts penetration and increasing software and services penetration. Ford Model e. This segment saw both revenue and volume growth, primarily from new product introductions in Europe. However, EBIT losses increased, reaching a year-to-date loss of $3.6 billion. Approximately $3 billion of this loss is attributed to first-generation products, Mach-E, Lightning, Puma, Explorer, Capri, with the remainder being investments in next-generation vehicles. Ford Blue. This segment achieved $1.5 billion in EBIT, with revenue growth outpacing wholesale unit growth. Higher costs were influenced by tariffs and adverse exchange rates. Ford Credit. This segment contributed over $600 million in EBIT, up 16%, driven by improved financing margins. They continue to originate a high-quality book with strong FICO scores. Management's forecasts and guidance. Full-year 2025 EBIT guidance, updated excluding the Novelis fire impact. Ford is tracking at the high end of their original guidance range of $7 billion to $8.5 billion. However, the updated full-year adjusted EBIT guidance, incorporating the Novelis fire and tariff adjustments, is now between $6 billion to $6.5 billion. Full-year 2025 adjusted free cash flow guidance, updated. This is trending better than previously guided, now expected to be between $2 billion and $3 billion. Novelis fire impact. The Novelis fire is expected to be a headwind of $1.5 billion to $2 billion in adjusted EBIT in the fourth quarter of 2025, and a total headwind of $1 billion or less between 2025 and 2026. Ford anticipates mitigating at least $1 billion of this impact in 2026. The company is adding jobs and increasing F-Series production to recover lost volume. Tariffs. Ford now expects tariffs to be a $1 billion net headwind for 2025, down from previous estimates. A significant positive development is a $1 billion benefit related to tariffs, primarily due to a proclamation allowing a greater percentage of MSRP tariff offset for parts, which will be recorded as a receivable in Q4. 2026 outlook. While specific guidance is premature, Ford anticipates recovering at least $1 billion related to Novelis. They expect a similar net tariff impact as 2025. Opportunities are expected from the evolving global emissions landscape, potentially reducing compliance headwinds and allowing for mix optimization. They plan for another $1 billion in cost improvements across their industrial system. However, investments in the UV platform and plant conversions will continue to increase. Significant risk factors. Novelis fire. The ongoing impact of the Novelis aluminum supply disruption is a significant near-term risk, affecting production volumes and costs. EV overcapacity and global pressures. The industry faces lower returns due to EV overcapacity, particularly from Chinese OEMs expanding globally. Supply chain disruptions. While they have improved their ability to manage disruptions, like the Nexperia chip situation, potential future issues remain a concern. Economic volatility. Broader economic conditions and fluctuating customer demand can impact sales and profitability. Highlights. Record revenue. Achieving $50.5 billion in revenue is a significant milestone. Ford Pro's strength. The continued success and growth of Ford Pro are providing durable profits and offsetting softness in other areas. Improved quality. Ford was the most awarded brand in the J.D. Power 2025 U.S. Initial Quality Study, indicating significant progress in product quality and reduced warranty costs. Cost improvements. The industrial team has delivered consistent year-over-year cost improvements, on track for a $1 billion net improvement this year, excluding tariffs. Tariff relief. The recent proclamation provides a significant positive financial impact related to tariffs. Hybrid prioritization. Ford is prioritizing hybrids and developing extended-range hybrid options, acknowledging current EV adoption rates. Affordable EV platform. The universal EV platform, designed for products around $30,000, is progressing well with sourcing and testing underway. Lowlights. Model E losses. The ongoing EBIT losses in the Model E segment remain a concern, though the company is investing in next-generation vehicles. Novelis fire impact. The substantial financial impact of the Novelis fire, even with mitigation efforts, is a significant drag on near-term financial performance. EV adoption pace. While acknowledging future growth, current EV adoption in the U.S. is projected to be around 5%, influencing product strategy. Most important statements from management. Jim Farley, President and CEO. We not only solidly beat expectations, but our underlying performance has us on track to raise our full year 2025 EBIT guidance if it weren't for the impact of the Novelis fire. Our Ford Plus plan delivered a record $50.5 billion in revenue and $2.6 billion in adjusted EBIT. Once again, we made meaningful progress in cost and quality, thanks to the disciplined execution of our industrial team. In the near term, I believe EV adoption will now only be about 5% of the U.S. market, but this is going to grow, especially for affordable EV vehicles. We are well positioned for this with the universal EV platform, which underpins digitally advanced, very spacious and appealing products that start at around $30,000. We are addressing the key issues affecting our industry head-on. Our improved industrial system is driving consistent results on cost and quality. Ford Pro is making Total Ford a more durable company and business. Sherry House, CFO. Ford continues to make great strides in our journey to build a higher growth, higher margin, more capital efficient, and durable business, and that progress is evident in our ongoing performance. The durability of our business is strengthening. Over the past 3 years, total company EBIT from software and physical services has grown by over 20%. Given the recent announcements by the administration, we now expect tariffs will be a $1 billion net headwind for 2025, down from $2 billion. This brings our updated adjusted EBIT guidance for 2025 to between $6 billion to $6.5 billion, with adjusted free cash flow of between $2 billion and $3 billion. Our underlying business is strong. And importantly, we are starting to more consistently execute and deliver our Ford Plus plan. The call concluded with management expressing confidence in Ford's ability to navigate industry challenges and deliver on its Ford Plus plan, with a strong focus on continued execution and improvement in cost and quality.